Hi everyone, today we'll discuss Ind AS 37 provisions, contingent assets and contingent liabilities. This standard does not apply to non-onerous executory contracts. Executory contracts are contracts in which neither party has performed the obligation or equal obligation has been performed. Onerous contracts are recognized as provision. The Unless contracts are the contracts, the cost of completing the contract are more than the benefits derived from it. If there is a penalty for non-completion of the contract, the lower of the penalty or cost of completion is recognized as a provision in the books. Which of the following is recognized as a provision? Accounts payable for goods and services but invoice not received, not recognized as a provision. It is not a provision, it is an accrual. Financial guarantee not recognized as a provision in scope of financial instruments. Warranty obligations recognized as a provision. The estimate liability is recognized as a provision. Accrued interest payable on borrowings not recognized as a provision. A provision is recognized when all the following conditions are met. The entity has a present obligation as a result of past event. It is probable that there will be outflow of resources. A reliable estimate of the amount of obligation can be made. Constructive obligations. A constructive obligation is recognized as a provision. Example, site restoration expenses or decommissioning costs. Probable outflow of resources is most likely than not. Contingent liability. A possible outflow that arises out of past events whose existence will only be confirmed by occurrence or non-occurrence of future events. Contingent liability is disclosed in the books of accounts. Contingent assets. The contingent asset is disclosed in the financial statements depending on the probability of inflow of resources. Best estimate. Most likely than not, single most likely outcome. Reimbursements. Reimbursement shall be recognized only when it is virtually certain that the same would be received. Restructuring. A constructive obligation arises when the company has a formal plan of identifying restructuring a business or point of business, the principal locations, the locations, functions, and approximate number of employees that must be compensated. Restructuring cost does not include the following: cost of uh, retaining the staff, marketing costs, investment in new system and distribution network. Identifiable future operating losses are not included in the provision of restructuring. Gain on disposal of asset is not included in the provision for restructuring. Levy is a part of Ind AS 37 where timing and amount are certain. CSR shortfall is not recognized as a provision if the commitment is made, then recognized as a provision. CSR shortfall appears in the director's report. This brings us to the end of session. Please do like, subscribe this channel. Thank you so much.